The Social Security Administration processes millions of benefit payments every single month, but they do not automatically enroll you in programs that could save you thousands of dollars every year. That is not laziness. That is by design. The system does not push money toward you. You have to pull it. And right now, in 2026, there are seniors in every income bracket who are legally exempt from bills they are paying anyway, simply because nobody ever told them these programs exist. Hello friends, I need you to stay with me for the next 20 minutes because by the end of this video, you will know exactly which 5 bills you may not have to pay, how much you could save, and the specific step you need to take to claim that exemption. This is not about finding loopholes. This is not about bending rules. This is about using the programs that were literally created for you, but are sitting dormant because the government assumes you already know about them. You do not. Most people do not. And the ones who find out tend to find out after they have already paid thousands of dollars they did not owe. Let me start by explaining why this happens. The federal government created these exemption programs with one assumption. They assumed you would find them. They assumed you would know to look. They assumed someone, somewhere, would explain them to you. That assumption is costing seniors real money every single month. Right now, today, there are people over 65 in your exact age group who are either receiving less than they are entitled to or paying more than they have to, sometimes both at the same time. The system does not send personal notification. The system does not call you on your birthday and explain what changed. The system does not reach out and say, here are 5 bills you no longer have to pay. That is why you are here. That is why this video exists, because the responsibility to know has been placed on you. And I have spent the last several weeks researching what those 5 bills are, exactly how much they could be saving you, and the exact process to claim each exemption. This matters in 2026 more than ever. Inflation has hit seniors on fixed income harder than any other demographic. Medicare premiums jumped again in January. Social Security benefits increased by 2.4%, which sounds good until you realize that covers maybe half of what your actual costs went up. Your purchasing power is going down. Your monthly budget is tighter. Every single bill you can legally eliminate matters, not just emotionally, but mathematically. The difference between paying and not paying could be the difference between covering your medication and choosing between food and prescriptions. That is the reality for millions of seniors in America right now in 2026. Before I go through each of the 5 bills, I need you to understand the foundation. Every single one of these exemptions is based on one thing: your income. Specifically, the threshold income that makes you eligible. Go above that number and the exemption disappears. Go below that number and it activates automatically or requires a single application. The government does not tell you what that number is for your specific situation because they assume you already know to check. Most people never do. They pay every bill that comes in. They assume if they were exempt, someone would have told them. That is a dangerous assumption. This is your responsibility now, not because it is fair, but because it is real. Subscribe to this channel right now and turn on the bell notification. Here is why. These programs change constantly. Income limits shift. Rules get revised. New exemptions get added. The Social Security Administration does not send you a letter explaining what changed. They do not call, they do not email. But people subscribe to this channel find out. They get the update before the deadline passes, before the money is left on the table, before they miss an enrollment window that will not come back around for another year. The ones who are not subscribed tend to find out after the exemption has expired, after the money is already gone, after they have spent another entire year paying a bill they did not actually owe. Do not be that person. You are already here. You have already invested time in this video. Finish that step right now. Subscribe. Turn on the bell. Then come back and learn what these 5 bills actually are. Now let me explain why the income threshold system is so critical to understand. When you turn 65, multiple benefit programs suddenly become available to you. Medicare, obviously, but also Medicaid in many states. Also QMB, which stands for Qualified Medicare Beneficiary. Also SLMB, Specified Low-Income Medicare Beneficiary. Also IRMAA, appeal options that most people do not even know exist. Every single one has an income limit. Go over it by even $500 and you lose the benefit entirely. Most seniors do not know these thresholds exist. They just pay every bill. They assume the system is universal, that everyone pays the same, that there is nothing to check. That assumption is wrong, and it is expensive. The threshold system creates a hidden population of seniors, people who actually qualify but do not know it. They are not hard to find because they are everywhere. They are your neighbors, your friends, people at your church or community center, people in your social network right now who are paying bills they do not have to pay. They have no idea. They think everyone pays what they pay. They think that is just how it works. They do not realize that 500 miles away in a different state, a senior with almost identical income and age is paying absolutely nothing for the same service, because they found the right form, made the right phone call, and accessed the right program. That is what we are talking about here. Not strategy, not optimization, not finding secret loopholes that the government is hiding, just knowing what exists, knowing how to apply, knowing what your income threshold actually is. That knowledge is the difference between a senior who feels trapped by the system and a senior who feels empowered to navigate it. Right now, you are about to become the second kind of senior. By the end of this video, you will know exactly which 5 bills these are. You will know exactly which one applies to your income level. You will know the exact step to take. Let us start with the first one. But before I do, I need you to know why I saved the biggest one for last. The final bill, the 5th exemption, could save you more money in a single year than the first 4 combined. This is not clickbait. This is just the order that makes sense strategically. You need to understand the pattern with the first 4 so you understand how to apply it to the 5th one. The 5th exemption requires one additional step that most seniors skip because they do not know it exists. By the time we get there, you will know exactly what that step is and exactly how to take it. Bill number 1, your Medicare Part B premium. This is the monthly charge that comes out of your Social Security check automatically. Right now, in 2026, the standard Part B premium is $170.80 per month. That is over $2,000 per year. Most seniors pay this without question. They assume it is non-negotiable. They assume everyone over 65 pays the same amount. That assumption is wrong. If your income falls below a specific threshold, you qualify for something called QMB, Qualified Medicare Beneficiary. What QMB does is pay your Part B premium for you, not reduce it, not subsidize it, eliminates it entirely. You pay $0 per month. The government pays the full amount to Medicare on your behalf. For a senior on fixed income, $2,000 per year is the difference between comfort and struggle. But here is the problem. QMB is not automatic. Medicare will not tell you that you qualify. SSA will not send you a letter saying, "Congratulations, you are now exempt from Part B premiums." They assume you know to ask. They assume you know the program exists. The income threshold for QMB in 2026 is $1,314 per month. If your total monthly income is below that number, you qualify immediately. How do you find out if you qualify? Call SSA at 1-800-772-1213. Tell them you want to know if you are eligible for QMB. They will pull your income. They will tell you yes or no. If yes, they will direct you to your state Medicaid office to complete the application. That application takes 20 minutes. You can do it by phone or mail. Once approved, your Part B premium stops coming out of your check. That is $170.80 every single month you get back. For someone living on a $1,000 monthly Social Security check, that is not small money. That is real relief. But here is what most seniors do. They see the Part B premium on their statement. They think it is mandatory. They never call SSA to ask about exemptions. They pay for years without knowing they qualified for the entire time. Then one day, they watch a video like this one, and they realize they have been paying for 5 years when they could have been paying 0. That person exists somewhere in America right now. Do not be that person. Bill number 2, your prescription costs under Medicare Part D. Most seniors assume they have to pay the standard Part D premium and cost sharing. The standard Part D premium in 2026 is around $35 per month on average, but depending on your plan, that number goes higher. Formularies change, copays change, out-of-pocket maximums change, and most importantly, income-based assistance programs exist that most seniors never access. If your income falls below $1,498 per month, you qualify for something called Extra Help, also known as the Low Income Subsidy Program. Extra Help pays most or all of your Part D premium. It reduces your copays to just $1 or $2 per medication. Some medications cost $5, some cost $3, some are free. You are no longer paying $30 per prescription. You are paying practically nothing. The program was created specifically for seniors who cannot afford their medications. It exists, it is funded, it is designed for you if your income qualifies. How do you access it? Call 1-800-772-1213. Tell them you want to apply for Extra Help. They will ask about your income and resources. If you qualify, they will send you the application. You complete it. You mail it back or submit it online. Within 30 days, you are enrolled. Your prescriptions suddenly cost almost nothing. A senior paying $150 per month in Part D costs and copays suddenly pays $15 per month. That is $1,680 per year that stays in your pocket instead of going to a pharmaceutical company. But again, nobody tells you this exists. You pay. You assume that is the way it is. You never make the phone call. You never ask the question. Years go by. Then you find out you qualified the entire time. That is the pattern with every single one of these 5 bills. The program exists, you qualify, but you never knew to ask. Bill number 3, your home energy costs. This one surprises most people because they do not think of energy as something with an exemption attached. But the federal government created a program called LIHEAP, Low Income Home Energy Assistance Program. LIHEAP is not an exemption from paying your electric bill. It is a direct assistance program. The government literally pays your electric bill for you, at least partially. In 2026, income thresholds vary by state, but the national average is around $1,800 per month for a single person. If your income is below that, you qualify. Here is how it works. You contact your state's LIHEAP program. You can find it by searching online, your state name plus LIHEAP. You submit an application. You provide proof of income and proof of residency. The government reviews it. If you qualify, they contact your utility company directly and make a payment on your behalf. The amount varies depending on how much assistance is available in your state that year, but it typically covers a significant portion of your bill. In some cases, it covers the entire winter heating bill. In other cases, it covers a few $100s that gets credited to your account. A senior paying $150 per month in electric costs during winter suddenly pays $50 because LIHEAP covers the rest. That is $1,200 per year in some states. That is the difference between using air conditioning in summer and sweating it out. That is the difference between heating your home in winter and keeping it cold. That is not luxury. That is survival for someone on fixed income. But LIHEAP is only available if you apply. The government does not automatically enroll you. Your utility company does not tell you that you qualify. They just send you a bill. You pay it. You assume that is the way it is. You never call your state agency to ask. You never know that help exists. You pay full price for years while the program sits there waiting for you to ask. The pattern is now clear. 3 bills, 3 income thresholds, 3 different programs, but the same fundamental problem. You do not know these exemptions exist. The system does not tell you. The responsibility is entirely on you to make the phone call and ask the question. Most seniors never do. Most seniors pay bills they do not have to pay because they never asked. You are not most seniors anymore. You know now, but knowing is only half of the battle. You also have to act. Stay with me because the next 2 bills are where things get more complicated. The 4th bill involves something called IRMAA, and the 5th bill could save you more money than all the others combined. But neither one is automatic, neither one is easy, and both require you to understand a specific loophole that almost nobody uses but almost everyone qualifies for. Bill number 4, your Medicare Part B and Part D premiums when you have high income. This one is more advanced because it involves something called IRMAA, Income-Related Monthly Adjustment Amount. Most seniors have never heard this term. Most seniors do not understand what it means. Most seniors are paying it without realizing they might be able to appeal it and get it removed entirely. Here is how IRMAA works. When your income exceeds a certain threshold, Medicare charges you extra on top of your standard Part B and Part D premiums. Not a little extra, sometimes a lot extra. If your income is above $194,000 for a married couple filing jointly, Medicare can charge you up to $440 extra per person per month just on Part B alone. That is $5,280 per year in additional premiums. On top of the standard $170.80 already coming out, you could be paying $611 per month total for Part B when someone else with lower income pays $170.80. That is the IRMAA surcharge. But here is the loophole that almost nobody uses. IRMAA is calculated based on your income from 2 years prior. So in 2026, Medicare is using your 2024 income to determine your surcharge. If your 2024 income was high because you sold property, took an IRA distribution, received an inheritance, or had a one-time payment of any kind, you are now paying IRMAA surcharges that do not reflect your actual current income. You could have had a $200,000 spike in 2024 from a property sale, and now in 2026, you are paying maximum IRMAA even though your current income is only $60,000 per year. The loophole is the IRMAA appeal. If your 2024 income was artificially high due to a one-time event, you can file Form SSA 44 to appeal your IRMAA surcharge. You explain the one-time event. You provide documentation. Medicare reviews it. If they agree, they reduce your surcharge retroactively to reflect your actual current income. You could get a refund of months of overpayment. You could lower your future premiums significantly. But almost nobody does this. Almost nobody even knows the appeal exists. They just pay the surcharge year after year, not realizing that one phone call and one form could eliminate most of it. Call SSA at 1-800-77213. Ask them if a life-changing event in 2024 qualifies you for an IRMAA appeal. If yes, request Form SSA 44. Complete it with documentation of your one-time event. Mail it to your local SSA office. Within 30 to 60 days, you get a decision. If approved, you get months of overpayment back as a refund or as credits against future premiums. For someone paying an extra $150 per month in IRMAA surcharges due to a property sale that happened in 2024, that appeal could put $1,800 back in your pocket this year alone. But you have to know the appeal exists. You have to know to ask. Most seniors never do. Bill number 5, property tax exemptions and deferrals. This is the biggest one. This is the one that could save you more money than all the previous 4 combined. And almost nobody claims it because almost nobody knows it exists. Every single state in America has some form of property tax exemption or deferral program for seniors. The programs vary by state. Some states exempt seniors from property tax entirely. Some states reduce the taxable value of your home. Some states allow you to defer property taxes until you sell the home or pass away. But every state has something. And in 2026, the property tax exemption in most states applies to seniors over 65 with income below a certain threshold. Let me give you specific examples because the numbers are dramatic. In California, seniors over 65 with income below $1,350 per month can claim Proposition 13 protections and additional exemptions that could reduce your property tax by thousands of dollars per year. In New York, seniors can claim the STAR exemption, which reduces taxable value by up to 90% depending on income level. In Texas, seniors over 65 are entitled to a homestead exemption that exempts a significant portion of home value from property taxes entirely. In Florida, seniors over 65 can exempt the first $50,000 of home value from property taxes completely. That is not a reduction. That is an elimination on $50,000 of your home value. The income thresholds vary. In some states, it is $1,500 per month. In others, it is $2,000 per month. In some states, there is no income limit at all. But almost every state caps the benefit at a maximum annual savings. In California, it could save you $3,000 to $5,000 per year. In New York, it could save you $2,000 to $4,000 per year. In Texas and Florida, it could save you $1,000 to $3,000 per year, depending on your home value. But here is the critical part. The government does not automatically give you this exemption. Your county assessor does not reach out on your 65th birthday and say, "Congratulations, your property taxes just went down." You have to file the application. You have to know that the program exists. You have to know to go to your county assessor's office and ask. Most seniors never do. They pay property taxes for years after turning 65 without realizing that thousands of dollars in annual savings were sitting there waiting for them to apply. How do you claim it? Go to your county assessor's office website. Search your state name plus senior property tax exemption. Download the application form. Most states have a deadline in the spring or summer, usually April through June, but some states allow applications year-round. Fill out the form with proof of age and proof of income. Submit it to your county assessor. Within 60 to 90 days, your property tax assessment is reduced. Your next property tax bill reflects the new amount. Depending on where you live, that could be saving you $200 to $400 per month forever. Not for 1 year, forever, as long as you own the home. That is why I saved this one for last. It is the biggest financial impact. A senior in New York who qualifies for the STAR exemption could save $3,000 per year. A senior in California could save $4,000 per year. A senior in Texas with a $300,000 home could save $2,000 per year. This is not theoretical. This is real money. This is the difference between financial stability and financial stress for someone on fixed income. But it requires action. You have to make the call. You have to fill out the form. You have to submit it by the deadline. The government will not do it for you. The system does not push money toward you. You have to pull it. And right now, thousands of seniors are not pulling it because they do not know it is there. Here is your summary. 5 bills, 5 exemptions, 1 pattern. You qualify, but you do not know it. The government assumes you know. You do not, so you pay. The solution is simple. Call SSA at 1-800-077-213. Ask about QMB for your Medicare Part B premium. Ask about extra help for your Part D prescription costs. Ask about IRMAA appeals if you had a life-changing event in 2024. Contact your state energy assistance program about LIHEAP for your electric bill. Contact your county assessor about senior property tax exemptions. 5 phone calls, 5 applications maybe, 1 afternoon of your time. The potential savings over the next decade of your life, $50,000 or more. That is the math. That is the opportunity. That is why you watch this entire video. Because knowledge is the only thing standing between you and money that is rightfully yours. Subscribe to this channel right now. The people subscribed here find out about these programs before the deadlines pass, before the enrollment windows close, before another year goes by paying bills you do not have to pay. Share this with someone you know who is over 65 and receives Social Security. That person needs to know these 5 exemptions exist. Subscribe. Share this with someone you know right now.